Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and in today's episode, we are going to go over all of the earnings that have been reported over the past week or so. I will be making this into a two-part video. I've had like 6 companies report earnings out of the 22 that I currently own just in the past couple of days. So there's so much to go over. There's so much news coming out, and it's coming out so fast that I just decided let's just go over some of the earnings for some of the companies that I own, because I know for a lot of you guys, I know that you own a lot of the same companies I do. Some of you copy my strategy tit for tat and you have my entire portfolio, which is shared down below in the description. Some of you guys copy and paste that directly to your portfolio, and I haven't made any changes with any of these earnings announcements yet, but I'll keep you updated if I make any of these changes to the portfolios. But the 3 that we're going to be talking about today in order, the first one that we're going to be talking about is Lockheed Martin, and it had some incredible earnings come out as I was expecting. A lot of you guys know I've been adding to this position a lot over the last couple of months. Next up, we have Johnson & Johnson. We're going to be talking about the change to the dividend as well as the recent earnings that just came out. Johnson & Johnson is one of my core holdings and one that I intend on never selling. It is one of my favorites. And then last but not least, we have Procter & Gamble. Procter & Gamble came out with much better results than I expected. And on their investor relations page, we'll go over their earnings as well as the update to their dividend. And this is also one of my core holdings that I never intend to sell. But before we jump into those 3, like I said, I always mention at the beginning of the video, my name is Jordan. I'm the Millennial Investor if you're not familiar with me. On the left-hand column right here, these are the 22 companies that I currently own and what they pay me on an annual basis. And this is my annual dividend income and my monthly dividend income. We have about $400 worth of annual dividend income right now, and about $40 last month for monthly dividend income, as well as my portfolio value and monthly YouTube income is also disclosed every single month as well. If you want to check out my 5 investing goals for 2021, these are the 5 right here, and my 2021 stock market prediction. And as always, I always mention that if you guys want to get signed up with M1 Finance, we had one more this morning. I can get you guys signed up for a $30 referral fee. All you got to do is use that link down below and deposit $100 to the platform, and you'll get a free $30 for getting signed up. And if you want to do that, and if you get started and get that free $30, there's also other things down in the description as well. I also offer mentoring calls. So if that's something you're interested in, if you're brand new to the stock market, if that's something that you'd want to do, there is mentoring calls down below, and that can help get a beginner investor started. It is not financial advice, but it's my way of benefiting you guys, but also your ways of supporting the channel. So lots of things like my dividend portfolio, my referral system, my mentoring calls, yada savings accounts, credit card referrals, lots of things like that. But go ahead and check out all that stuff down below in the description. And let's go ahead and get started with the first piece of news here. Let's look at Lockheed Martin. Lockheed Martin has a target weighting of 5% of my portfolio, currently makes up 4.7%, and I own a little under 2 shares of this company. And those of you that know me know that I was buying this company heavily in the past 2-3 months. When it was early 2021, when the stock dipped to 330, 340, 320, I was buying this stock like crazy because they had just raised that dividend and they were reporting record numbers, record revenue, record profitability. And then they were also looking at buying out another smaller company as well. I should say small, but it's in the billions, Aerojet Rocketdyne. This big spike up right here when the stock went from 42 to 52 in a day was when it was announced that Lockheed Martin is looking at potentially buying out their entire company. So this is going to be big news for Lockheed Martin. I think it's going to give a lot of benefits to shareholders on both ends of this deal. I really want it to close. I really want it to go through. And this just makes me one more reason why I'm bullish on Lockheed Martin. I mentioned the other day how the Biden administration announced that they were actually increasing defense spending. One of the main reasons why the stock had downtrended over the last couple of months ending in 2020 and the very beginning of 2021 is because they were actually concerned with the new president that's in office that he was not going to raise the Department of Defense budget, that they're not going to spend as much on defense that they had in previous years. Actually, the very opposite happened. Not only are they not decreasing their defense spending, but they're actually raising it. I believe, what was it? I think 1.3%. Anyways, regardless, the point is this company is still financially a fortress. They are absolutely incredible. They are so profitable. I believe they only pay out about a third of their profits in the form of dividends. And going forward, now I know that this company has been very successful in the past. Let's look at how this company is doing in the future. So let's go over the earnings report real quick. They reported fourth quarter 2020 earnings with net sales of $17 billion compared to $15.9 billion last year. So a big revenue jump up year over year. Net earnings. Now this is more important. I always talk about earnings being more important than revenue. Net earnings from continuing operations in the fourth quarter of 2020 were $1.8 billion or $6.38 a share compared to $1.5 billion or 5.29 cents a share year over year. So previously, last year in 2019, they had the quarter ending at 5.29, and this year it went up to 6.38. So a big jump up there in profitability. Their net earnings is far more important than the revenue, but both of them growing year over year. Now, cash from operations in the fourth quarter also increased as well. In 2020, it finished out at 1.8 billion versus the previous year of 1.5 billion. So their free cash flow was also a little bit better as well. So overall, looking at all three of those, revenue year over year up, net earnings, their profitability year over year up, and then their cash from operations from selling their incredible products once again up, up, up across the board. Now let's go ahead and zoom out here because it's a little easier to see, and let's scroll down. So if we look at their 2021 outlook, this shows their net sales, their operating profit, diluted earnings per share, cash from operations, and let's go ahead and look at these numbers. In 2021, they're projected to do about $67 to $68 billion, okay? Now if we scroll last year, they finished out the entire year of $65 billion. So last year they did 65. Next year they're going to do about 67, 68, an increase year over year for 2021. Business segment operating profit. Let's look at how they did that in 2020. Business segment operating profit finished at 7.1 billion, and it's projected next year to be 7.3, 7.4 billion, an increase year over year. Let's look at the most important from all of this, the next two, which is diluted earnings per share and cash from operations. Let's look at their earnings per share in 2020 for the entire year. So their net earnings per share was $24.30. Pretty good. But instead of $24.30, next year they're supposed to do over $26, an increase year over year. And then last but not least, we have cash from operations. 8,100 is what they did last year, and then next year they're projected to do over 8,300. So once again, an increase year over year. These numbers are incredible. The profitability of this company is absolutely massive, and even though this company started to run up in price when it started to break over $400 a share, I'm considering increasing this company once again. The one thing I hate is that I have so many good companies in my portfolio, it's hard to pick one to take down. That's the one thing I always hate, is that I love all 22 of these companies. I love every single one of them. I don't want to see any of them go. And so anytime I make a move, it has to kill me. But Lockheed Martin, with these incredible numbers projected for 2021, it's really hard to find a scenario where I don't see myself making money on this company, not only in 2021, but over the next 5 and 10 years. It's an incredible company. I love the numbers that they just came out with. And let's go ahead and move forward, close out of Lockheed Martin, and let's go ahead and look at Johnson & Johnson. It is target weighting and currently sitting at 5% of my portfolio. We're up 26% on it in a money weighted return, and we own just under 4 shares of the company. Now, this company over the last 5 years has performed incredible, and it seems like there's never a bad time to own Johnson & Johnson. There is almost no price where I couldn't say, wow, I don't want to own this company. It could go up to 175 tomorrow. I want to own it. It could go up to 200 tomorrow. I want to own it. It could go all the way up to $300 a share tomorrow, and it's still a company that I'm interested in owning. They just have such an incredible business model. The level of profitability and dominance in the healthcare market that this company has is just breathtaking. Now let's go ahead and start off with the earnings, because the earnings are very important for this company. And this company finished out the first quarter of 2021 with net sales of $22.3 billion, reflecting strong growth of 7.9%. This is the largest healthcare company on earth, and they are a Goliath in their space. And even a company that is $438 billion, one of the largest on earth, is still growing those earnings at a whopping 7.9%. Very, very good. First quarter earnings per share finished out at $2.32 and increased 6.9%. Adjusted earnings per share was 2.59, which also increased 12.6%. Now I want to point something out here. Their first quarter earnings per share was $2.32, but they're only paying out in dividends every single quarter $1.01. So they're paying out less than half of their profits in the form of dividends, because they made $2.32 and they only paid out $1.01. So half of $2.32, what would that be? $1.16. So they're paying out less than that, and they're still investing heavily back into their business while still paying out some pretty dang good dividends. Now, company increased 2021 full year guidance for adjusted operational sales growth to 9.3% and adjusted operational earnings per share growth to 16.8% at the midpoint. And if we scroll down here to page number 5, you will see the full 2021 year guidance. And you can look at all of the increase year over year. 8 and 9% growth, 7 and 9% growth, 9 and 11% growth, 15, 17, 17, 19% growth. Across the board, just like with Lockheed Martin, this company is growing year over year nonstop. And that's why not only the year chart, this company continues to trend upwards, and not only the 2-year chart does this company continue to trend upwards, but looking at the 5-year chart, you can see why this company continually goes up in share price. And not only does this company tend to go up in share price, but they tend to do something else as well. Just like with Lockheed Martin and most of the other companies I own, 5 years ago, every single quarter, they paid out 80 cents per share in dividends. And then that 80 cents went up to 84, a 5% increase. Then it went up to 90, and then it went up to 95, and then it went up to last year's raise of $1.01. And we will look at their recent dividend announcement that they just announced. So they were paying $1.01, and then this little line right here, they just announced that they will be declaring a dividend of 1.06. So about a 5% increase from last year's amount of $1.01. And now this just gives you one more reason to own the company. It's if they didn't already have an incredible business model, a good dividend yield, growing earnings per share and revenue every single year, consecutively year over year, now that dividend yield is just a little bit higher. One of the main reasons why I invest in my portfolio is that if you notice, what the title of this portfolio is the dividend growth portfolio, not just the dividend portfolio. Because if I just cared about yield, while yield is very important, that is not what I care about as an investor. I want to see that a company can consistently raise its dividend 3, 4, 5, 6% every single year, year in, year out, no matter what the economy is doing. And Johnson & Johnson is a perfect example of that. As we scroll past this, you see that they did $2.40 going back to 2012 to $2.59 to $2.76 to $2.95 to $3.15, $3.32, $3.54, $3.75, $3.98, and now so far in 2021 they're on track to beat last year's record as well, breaking $4 in dividends paid out to shareholders. This is once again another reason why I love owning Johnson & Johnson, and while it'll continue to be a core holding in my portfolio as long as I live. I intend on having a YouTube channel for a very, very long time, and I highly doubt you will ever see the day that this company is not in my dividend growth portfolio. I love it, love the results there, and we'll go ahead and move to the last company on the list, which is another one of my core holdings. We'll go ahead and move to Proctor Gamble. It currently makes up 4.8% of my portfolio with a target weighting of 5%, and we're up 7.4% on a money weighted return since owning this company, and I own about 4.5 shares of the company at an average share price of $132, so almost dead even from where I bought it at. It's just up a teeny tiny bit. What is that, like 1.5%? And this company, the same thing like with Johnson & Johnson, an incredibly long track record, awesome revenue and earnings per share growth, and this just supplements how I feel about the company just that much more. The main bullet point header here, right? We have net sales plus 8%. Organic sales, meaning previous customers going back and buying more, plus 8%. Diluted net earnings per share, $1.47, which was 4% more than the prior year, and core earnings per share of $1.64, 15% versus the prior year. And let's go ahead and go down to the next paragraph here, the one that I'm highlighting. Operating cash flow was $5.4 billion for the quarter. Adjusted free cash flow from productivity was 113%, and the company returned $5 billion of cash to shareholders via $2 billion in dividend payments and $3 billion in common stock purchases. $5 billion was returned to shareholders just in the last 90 days. And I think that's part of this spike up here. That's why this company started to uptrend, partly in due to the dividend raise, people wanting to buy the stock, the earnings per share growth, but also the company buying back its own stock as well. And there are some great things that come along with buybacks when a company like this is so profitable, but $5 billion being returned to shareholders just in the last 90 days. So that is incredible. And let's go ahead and scroll down here. If you want to pause this and look at that revenue segment, you can look at that as well. But let's scroll down here and let's go ahead and find the fiscal year 2021 guidance, this part of this section right here. Procter & Gamble raised its outlook for fiscal 2021 all-in sales growth from a range of 3 to 4% to a range of 5 to 6% versus the prior fiscal year. The company raised its outlook for organic sales growth from a range of 4 to 5% to a range of 5 to 6%. Foreign exchange is now expected to be roughly neutral to sales growth for the fiscal year. So the company is projecting more sales growth, more organic sales growth as well, and the same thing goes for profitability. The earnings per share numbers are going up just like all three of these companies. Lockheed Martin increasing their number estimates. Johnson & Johnson increasing their numbers estimates. And now we have Procter Gamble, increasing their numbers estimates. And if you notice a trend with all these companies, once again, the further you look out on the chart, the better their performance is. And just like with Johnson & Johnson and Lockheed Martin, not only does this company have mass profitability, growing revenues, and has an uptrending share price over the last 5 years, and including since I've owned them, all three of these I'm up on them. But not only does the share price go up, let's look at the dividend history as well. It went from 67 cents going back to 2016, and then it was raised to 69, a small raise, up to 72, up to 75, up to 79, and now we get here to 2021, and their dividend history is incredible, and this year definitely took me by surprise. They have 130 years of dividend payments. I'm going to go ahead and say that again just how insane that is. They have a consecutive dividend payment lasting 130 years, longer than anybody has ever lived on this earth, okay? And of dividend increases, they are now 64 consecutive years in a row. And $135 billion have been returned to shareholders just in the last 10 years, which in case you're wondering, $135 billion, that's over a third of the value of the company just in the last decade. So pretty incredible there. Now let's scroll down and let's look at this line that I highlighted, and you see that every single quarter they pay a dividend, and they paid 71 cents, and they raised it up to 74, up to 79, and now this line that I highlighted, they raised that dividend, not a conservative amount that Procter & Gamble usually does of 3, 4, 5% dividend raises. They raised it 10%. This is incredible dividend growth for an old blue chip stock. And this is why I love owning this company, and it now has a better dividend yield than ever. And M1 Finance does not update that properly. So let's go ahead and take 0.87 and multiply that times 4. So that gives you $3.48 every single year in dividends, and divide by today's share price of $134.31. So right now the company has a dividend yield of 2.59%, which is even better than what M1 Finance has to show. And for a company that's very defensive, very reliable throughout any economic recession, an incredible dividend yield, incredible dividend growth, and an overall growing share price over the long term, I think that all three of these companies, including Procter & Gamble, are ones that I want to own. And I'm very happy with my earnings for these companies. And I'll give an update on some other earnings that I have in my portfolio as well, because we have a lot to get to. So stay tuned for that in the next video. But thank you guys for tuning in. Like I said, I have mentoring calls down below as well. Or if you want to get signed up with M1 Finance, you can get a free $30 just for downloading that link and then signing up and depositing $100. But thank you guys so much for watching, and I'll catch you guys next time.